Hey, today we're going to be learning about probabilities. This lesson is probably one of my most favorite lessons in investing. We're going to be talking about what happens in bull markets, what happens in bear markets, how the probabilities can change. And we're going to be talking about two very important concepts. They are the law of large numbers and fooled by randomness. So one of the best ways to explain this lesson is by using the coin flip analogy, as there's many similarities between flipping a coin and stocks. As with a coin, there's 50-50 odds, you get heads and tails, and with stocks, the price usually goes either up or down. Yeah, it can go sideways, but for the sake of today's lesson, let's keep it nice and simple and focus on the two main directions, up and down. So with this coin flip analogy, let's just imagine you got some guy like Mr. Beast or whatever, and they're playing a game where if you flip a coin and you get heads, you stay standing up and you go to the next round, and whoever can flip heads the most times and is the last person standing up, then they win a cash prize of let's say $1 million. So let's just say you start off with 100 people, and in round one, everybody flips the coin, and then roughly 50 people would be standing up. Now, this number doesn't necessarily need to be exactly 50. There are worlds where all 100 people get heads. It's extremely low probabilities that that does happen, but it is possible. Now, in round two, let's say out of these 50 people, roughly 25 would be standing up. In round three, out of those 25, there'll be about 12 or 13. Now, in round four, that would go down to roughly 6. In round 5, that would go down to 3. Now, in round 6, let's just say it went to 2, because you can't really do 1.5. And in 7, you finally found a winner. So this person here, they ended up winning $1 million. Now, with this example, it's very easy to see that this person, they got lucky. They got extremely lucky, and they won 7 times in a row. And it's not a skill-based game. But if you were to ask that person, when you're in the moment and living through this, you can easily fool yourself that you have some sort of edge, or you're just extremely lucky that day. So with this example, the news reporters came, they went to the person, they asked him, hey, what's your secret? How was it possible that you flipped heads 7 times in a row? And the guy's just like, oh, I tell you what,
That's my quant.
Your what?
My quantitative. My math specialist. Look at him. You notice anything different about him? Look at his face.
And now what would happen with this story? It would probably blow up, and it would be like a massive news piece. Like all the time, if someone wins the lottery, which is just pure chance, it becomes a major news event. So what has actually happened with this guy? This guy has been fooled by randomness. So this is a concept popularized by Nassim Taleb. I really recommend that you go deep on this concept, pick up the book and read all about it, because randomness is all around us and plays a factor in our lives on a daily basis. So this is so similar to the stock market. Like, people are winning all the time, thinking that they have an actual strategy, but it's actually just randomness. Like, if we're talking about the law of large numbers, imagine you play this game, but with millions more people. That's how many people are participating in the stock market. Then how many people would get lucky longer than this? Like, there is a way to get 20 trades in a row correct. Now, the odds of that happening to you is extremely low, but when we're talking about millions and millions of people, it's going to happen to potentially hundreds, if not thousands of people. And now, what are we going to hear on social media? We're only going to hear the success stories. So those people, they're going to be like this guy who won 7 times in a row. They're going to want to scream at the top of their lungs and tell the world, hey, look at me. This is what I've done. Hey, it's really easy. Hey, I think I can help you make money too. And then that's how all of these courses and all of this start popping up all over the internet. Now, what we need to talk about as well is how this game changes in a bull and a bear market. Like, in a bull market, it's kind of like you have a rigged coin where it flips onto heads more than 50-50 because everything is going up. So everything is getting heads. And then in a bear market, it's the opposite of that, where the coin is now rigged to get tails. So if that's the case, even more investors get fooled by randomness in a bull market. And this can be extremely dangerous because everybody starts to feel like they're a genius. And then as soon as the market conditions change and it turns into a bear market, then these people can get wiped out extremely quickly. And there's so many stories starting to come out even right now. We're living through it as we speak, where people started investing after the great financial crisis in 2008. Let's just say, like, a lot of people, they started investing in 2009, 2010, and we've been in a raging bull market. So these people, they've had that rigged coin that flipped heads more often. And now, we're going through a bit of a decline with the market. They may have just gotten through the COVID crash. And now this most recent crash, it's catching a lot of people off guard. So they're not realizing that they're now holding a different coin, a rigged coin to the downside. And then these people just lose way too much money and sometimes even become insolvent and lose everything. So it's our job as investors to really think about, what coin are we actually holding? Have we been potentially fooled by randomness because it's a bull market? Do we actually have a proven profitable strategy? For me personally, right now with the markets, I feel like there's a lot of uncertainty, or at least I am definitely uncertain of the market. So I believe I'm probably holding one of the rigged coins that always gets tails or may go down quite a bit. But because I'm uncertain of the game that we're playing and I'm uncertain of the coin that I'm holding, then I play my cards accordingly. So for me personally, in this market environment, I want to play it safe and I just want to focus on surviving. I want to be around in the bull market. And then that's when I'll start swinging for the fence and making my money back. Another thing is, if you look at Warren Buffett over the last few years, he's been getting quite a lot of hate that his results haven't been that optimal. And sometimes he's even struggled to beat the S&P 500. But the thing is with Warren Buffett, at least he is here. And at least he is one of the richest people in the whole world. And he is a billionaire. So he is proven that he knows how to play the game and he can survive throughout all market conditions. So next time you see on social media someone talking about their success, or maybe they're selling a course, or they just had a big winner, ask yourself, have they been through a bear market? Have they experienced holding the negative coin? So by understanding all of these lessons, it's really helped me with FOMO. Before, I would always hear like, oh, this guy made $1 million, 2 million, 10, whatever the number is, in a very short amount of time. And their percentage ROI was huge, 100, 200, 300%. Some people 1,000, 10,000%. This is so highly unlikely that they can repeat this again and again and again. And they are actually fooled by the randomness. What we can learn from people like Warren Buffett and some of the other best investors in the world is, if you look at their average compound rate, it's roughly like 20%, between 10 and 20% every single year. So if someone's making 100, 200% and claiming that you can do the same, then it's so unlikely that they are actually telling the truth, or they are just straight out ignorant. And another trick that these fake gurus selling courses, they like to claim is, oh, I try to make 1% a day. That's my target. But that is so highly unrealistic that you can do that for an entire year. Yeah, you'll have days where your account goes up 1%. That's a given. But to do that on a consistent basis, no one in the world can actually do that. Another thing that I think is worth your time is researching the legendary trader Jim Simons. This guy is a mathematical genius who developed quantitative strategies that could outsmart the market. Look at this guy. His average returns are like between 60 and 70%, and he's the best in terms of ROI. Very few come close to him at all. So imagine these guys that are claiming that they can get 1% a day, that's 365%. If you do the compounded 1%, it's even more than that. So if Jim Simons can't get close to that, then these guys, they're straight out lying. Anyway, that wraps up today's video. Hopefully you found it helpful. If you did, please leave a like, comment, and subscribe, and I'll see you in the next one.